Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario posted by Bettina in Discord yesterday, a 5-wave leading diagonal 1, 2, 3, 4, 5, after which we then look for a retracement to the downside and another leg towards the upside. This scenario can also work nicely with the weekend coming up, as most commonly the weekend is a sideways ranging structure, so if we could finish this wave 3 maybe today, then we can start ranging in a 4 in the weekend as well as a 5 against resistance that we have to the upside. We have here the blue box sitting between 59.4k and 60.2k. Now in this particular diagonal, all of the subwaves are 3-wave structures, so a 3-wave in 1, in 2, looking for a 3-wave in 3, 4, and then a wave 5. We also have some support to the downside, which is the blue box here, 56.5k to 56.9k. The invalidation for this scenario is price taking out this low at 55.5k. Looking at the second bullish scenario, we have an impulse to the upside, 1, 2, 3, 4, 5, a target area for your wave 5, and you look for a move towards the downside. Minimum target for wave 5 is taking the high of 3, and we took the highs over here. The problem, however, with this scenario is ending a wave 5 with this move to the upside. You want a wave 5 to either be an impulse or an ending diagonal. An impulse would be a wave 1, 2, 3, 4, 5. No overlap between wave 1 and the wave 4. 1, 2, 3, 4, 5. We do have overlap here between the waves, which then means we have to consider diagonals. Now, the by far most common diagonal is a contracting ending diagonal, 1, 2, 3, 4, 5 wave structure and then reject. But this price action here is not contracting, it's expanding, and an expanding diagonal is very rare, never preferred, unless all of the other scenarios fail, which means that when we compare the bullish scenarios, a leading diagonal has a higher probability than a finished impulse. If we then look at the bearish scenario, then we look at a 3-wave structure to the upside in a wave W, or a finished 1, 2, 3, 4, 5 wave structure in a wave A with a truncation, which is very rare, but I just simply put it on the chart because we are looking for similar price action between a WXY and ABC, a 3-wave structure down, and then another move towards the upside to take out the high in a wave C or Y. Now your target area here is between the 618 and the 1.236, which is between 57k and 55.4k. The main difference between this scenario and the leading diagonal is that in this scenario you are allowed to take this low here at about 55.5k, but also in both of these scenarios we are still looking for more upside to come. If we then go to the 15-minute time frame, then you can see that a price retraced to the 886, and the 886 here is taken from the high to the low. Now the fact the 886 is hit increases probabilities that the price action after is corrective, and that is important because it increases probabilities to still take the highs here at a later stage. The 886 is rare for a wave 2, common for a wave B or a wave X, increases probabilities the move down is corrective in wave C's or wave Y's or other corrective structure, so therefore we're looking still for price to take the highs. If we then go to the 4-hour time frame, then this volume profile is very interesting. You can see that it's also very nicely respected. Resistance here at the value area high, a move outside of the value area, but we came back in, moved all the way to the downside, also again a bit of a move outside of the value area after a bit of support, move back in, touch the value area low, and now we are again moving towards the middle of the volume profile, and the point of control here is sitting at 59.5k, which is a very interesting area of resistance, and it is part of the resistance box that I have to the upside as well. Looking at the local CVD divergences, we have a bullish as well as a bearish CVD divergence. Two of the bearish CVD divergences here played out as price just now took this low over here. We still have this bearish CVD divergence and and this bullish CVD divergence. So they are countering one another. What I prefer to do now is either wait for clarity, take the low or take the high, or keep an eye on absolutely new CVD divergences. So just keep an eye on the 3-minute, 50-minute time frame, look for market structure either to the upside or downside more locally, and see some new fresh CVD divergences coming in. We also have some news today, Friday, September 13th, and I just realized it's Friday the 13th. Nice one, 4 p.m. Central European time. Make sure you trade safe around that hour because you never know what might happen on this day. If we then look at the probabilities of the different scenarios, then currently on the number one spot we have the Bettina pattern, as I call it. She loves diagonals. This is the leading diagonal to the upside on the number one spot here. Highest probability at the moment, still looking for higher prices, price reaching resistance. Arguably the same is true for the number two spot over here, which would be the bearish scenario, WXY, where we also still look for higher prices. And on the third spot, lowest probabilities would be a finished impulse because of the ending structure over here. So I am mainly interested in looking for this high to still be taken. The high is difficult to count as the end of an impulse due to it then being an expanding diagonal, very rare. Taking the high once more at a later stage has the highest probability, though it's nice to retrace to some support. Area of interest for myself is at 56.8k to 56.5k. Over here we have a daily naked point of control, some other volume levels, and also a golden pocket at this area here. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.